So I think that we can start. So other people will join later, probably. Yeah. So welcome everyone to our new AMA session. Today we are going to discuss RWA adoption in 2026, institutions, retail, and new on-chain economy, which is RWA brings. Brings now. So today we have a few speakers. So the first speaker, it is Melania, business development manager at PIPO. Vladimir Tikhomirov, co-founder of AlGebra, and Austin Lee, head of business development of Hydrex, sorry. So we'll be glad to give the first word to Melania to introduce herself. Yeah, Melania, you can speak.
Thank you. Hi, everyone. I'm Melania and I handle business development at PIPO. We're building the first regulated platform for issuing on-chain warrants on pre-IPO company shares. And I would like to explain shortly how does it work in practice. Most people know DeFi as a space defined by tokens.
Can you
Sorry?
hear me?
Yeah? Yes, I can. Can you hear me?
Yes, Melania, everything's
Melania.
Guys, I didn't hear anything, sorry.
Hello?
Hello?
Can you guys hear me?
We can hear you. Melania, we can also hear you as well.
All right. Okay, so I'll just continue. Roman dropped off for some reason. But that's all right. Okay, so yeah. Let me restart. Yeah, basically, most people know DeFi as a space defined by tokens and yield. We offer something different, a real legally protected right to a stake in private companies before they go public. Here's how the model works. We select late-stage private companies preparing for listing on NASDAQ or other stock exchanges. We structure an ERC-20 warrant token issued under Regulation S, making it accessible to investors worldwide, excluding U.S. Residents. This warrant gives you the right to purchase shares at a fixed exercise price, strike price, at the time of the IPO. If the market price at the time of listing exceeds your strike price, you basically profit from the difference. And since it's a warrant rather than the share itself, your cost is just a fraction of the share price, making the risk to reward ratio highly attractive indeed. Our users don't have to wait for the IPO itself, though. They can trade the warrant on PIPO secondary market even before the listing. This means real price discovery, real liquidity, and no asset lockup periods. When the IPO arrives, they can either convert the warrant into actual NASDAQ traded shares or sell it on the secondary market for USDC simply. In short, we have created a regulated mechanism that moves from a private company to an on-chain instrument to a public offering with liquidity provided at every stage. This is precisely what didn't exist before PIPO. But essentially, yes. Essentially, we are doing something that hasn't been done before. Without lockups or massive buy-ins, you can trade better than with typical memcoins, for example.
Thank you so much, Melania, for introducing our project. Yeah, that is true. And I want to move to our next speaker, Vladimir. It will be interesting if you introduce your project and yourself.
Okay. Hello, everyone, and thanks to PIPO for organizing this one. So my name is Vladimir. I'm co-founder of AlGebra, In very simple words, we are a protocol which help chains or companies to build own decentralized exchanges. So thanks to our protocol, everyone could use all innovative solutions in the decentralized exchange space and build own exchange with some extra features. So there are more than 100 decentralized exchanges built on AlGebra, and our main goal is to provide the best technology on the market to all our clients. So that's what we're about, and we of course we are also looking to RWA space right now, and happy to share our thoughts today. Thank you for the invitation.
Thank you so much for the introduction. So I move to the next speaker, Austin.
Hey everyone, good morning. My name is Austin. I lead business development at Hydrex. We are a MetaDex on Base, so we're able to source liquidity for different protocols and projects. Specifically, over the last few months, there's been a lot of RWAs coming on board. So we essentially help them build up their liquidity pool using our great partner, AlGebra's Algebra Integral technology to source a few different types of liquidity. So we have concentrated liquidity if you're looking for particular tight ranges. We also can source your classic V2 uni-style liquidity, which is going to be full range. And then we also have single-sided staking. So for folks that want to make adding liquidity a little bit easier and just essentially staking one token, they can do that with the single-sided liquidity. So Hydrex is really built to support the Base ecosystem. We're only on Base and support those tokens to grow their liquidity pool. And with the case for RWAs, we can also connect into different types of vault products as well as lending markets if folks want to help grow liquidity on their supply side for their lending market. So I think that there's a lot of use cases I think that we're excited about, especially some innovation that we're doing with AlGebra, and super excited to chat about this today. And PIPO, thank you so much for bringing Hydrex on this AMA.
You're welcome. Really glad to see such interesting project on our AMA session. We are moving to our next question. So our next question is, what the problem that you are solving that that the market still underestimates? So here I'm glad to hear answer from Melania.
Well, in our case, like before, like pre-IPO equity has like had no natural home in DeFi. It's liquid, legally complex, and built for insiders, or at least before was built for only insiders. We built the legal and technical stack that makes pre-IPO tradable for the first time. That's something that never existed before, basically. And what I mean by this is that everyone is talking about tokenized treasury bonds and tokenized real estate, for example. Those niches are crowded. The solutions within them are obvious, and traditional finance institutions are already serving them efficiently. However, most people overlook the pre-IPO market. As the charts in most studies show that actually it's simply difficult to value potential IPOs and estimate the liquidity that they might bring to the market. Considering the scale also, like if we're talking about the real world, there are around 700 companies worldwide that have reached Series C funding. And they are ready to go public, but have not listed yet. The aggregate private market value runs into the trillions of dollars, indeed. And today, this value is not represented on the blockchain at all. So this is where we come. This is not secondary market. I mean, there is no also pricing mechanism and no liquidity. I mean, at least till now. We are not competing with other DeFi protocols for the same capital. We are creating a new category. This is what we are trying to do and we are actively working on. And in our experience, also forward-looking investors, family office, high net worth individuals, and crypto funds understand the book of the value is created at the pre-IPO stage. So yeah, I mean that's where we bring value indeed, and that's what we bring like in terms of like different instrument on the market and completely different perspective on how you can shape the market indeed.
Yeah, that's true. That's true. Thank you so much for the answer. Here I would like to hear other answers. Vladimir, how does it works in the same way in the algebra?
Okay, so we are in DeFi space, and I think that all the projects around try to solve two big problems. Number one, to give ability to people, to users, to manage their money in more effective way. And for example, that you could invest from Japan to US company or US project, and you can buy and sell. So number one, so help people with finding new efficient way how they can use their money. And number two, help companies or help projects to grow from financial perspective, to get new shareholders, to get attention, to get initial funding for growing. So that's all about finance, open finance, all around the world for everyone, accessible and in more effective way. As for algebra, we are in the decentralized exchange space, and we really like the model of DEXs, because that's a great way how users could complement, help each other. One party provide liquidity, and they serve another party who are traders, and both of them get profit thanks to this. So it's very simple, similar to blockchain, where you have validators which get paid by people who make transactions. So the same in the decentralized exchanges. If you provide liquidity, you get paid for this one from people who make trades. So we believe that's one of the best model on crypto in general, because it's not like speculations, it's not like promises, it's a real business, and we're happy to contribute in this space. So that's about algebra and our goals.
Thank you. Thank you. Quite interesting solution. Yeah, and Austin, uh, can you answer here too, please?
For sure. Yeah. What problem that we're solving that the market still underestimates? I think a big one right now, and I'll probably answer this just specifically for RWAs, is going to be liquidity. We think about liquidity kind of as a life cycle. So for RWAs that are initially coming on chain, oftentimes they first need access. So new users coming in to purchase their specific RWAs, whether this is stocks, bonds, T-bills, real estate. So being able to open up and create a liquidity pool is a great way to get new users into the platform, into the asset. And then secondly, a lot of times these RWAs want to be able to enable collateralization. So when you talk to different creators or curators or different types of lending markets, oftentimes those curators want to see enough liquidity so that way they can take care of bad debt. So by building up that liquidity pool, that enables you to collateralize your assets, enabling people not just to be able to earn on the LP, but also being able to earn on the lending market itself. And then once you are able to have that lending market stood up, you can start to do different things and create structured products that facilitates both. So in our mind, I think the crux of this and kind of the big problem that we're solving at Hydrex is to be able to source liquidity through our fee 3 flywheel. So first, being able to do that and source liquidity for lending markets, and then sourcing liquidity for supply side lending markets as well. So at the crux of it, I think a lot of this starts with RWA adoption is starting to have that liquidity there, so you can do unique and innovative things that tap into the different DeFi Legos.
If I could ask, so Austin, what kind of assets do you mean here? It's like, I know, assets which are actively trading on traditional exchanges, or it's new type of assets, I know, any factory which is just decide to go to RWAs?
Sure. Yeah, I think a little bit of both. Obviously, the more liquidity, I mean, the more volume that folks have for those different types of assets. For example, we have SpaceX as a tokenized equity on Hydrex, and that does pretty solid volumes, even with like a lower liquidity pool. But then you also have, SGov, which is a T-bill yield, where people may not trade it as much, but some people still want to get access to those different RWAs. But it's still a great way to set up, get access, and then start to work towards collateralization of those different assets. So yeah, I think that RWAs is definitely a broad bucket. And I know we could probably slice it up and dice it up in a bunch of different ways. But yeah, if you have something that has more volume on centralized exchanges, it's going to do better with those DEX liquidity pools. But I think it's still a great first step for those folks that might have something a little bit more innovative, such as liens could be a great use case where people just want to buy it to get access and more hold on to it in the DeFi world.
I hope he answered fully for you, Vladimir. Yeah. Yeah, I'm really glad that such project joined our AMA session. We should move to the next question. So here, what does the real adoption mean in RWA and tokenization today, in your opinion? Vladimir, what do you think here?
Good question. So, it's a tricky one because I heard that many people believe that, like, let's tokenize everything and make it on chain, and you have an idea, let's tokenize it. You have, I know, apartment, let's tokenize it, and so on. But I think that's a huge problem because of legal and because of bankrupt situations and so on and so on. So I think we should be really careful. It's a okay, let's start a different way. So we believe that, unfortunately, in this case, we need regulation everywhere for RWA, because if we do regulation, we get access to real money in the space. So let's say big banks, big governments will never use your platform, which is not regulated, unfortunately. So we can still play like a sandbox with some small amount of money, unfortunately, until we are not regulated. And why it's important? Because trading of RWAs could affect our economy in general. For example, let's imagine that you have tokenized oil, and you don't have enough liquidity on weekends, and oil price go down like 20%. And it could trigger different events in economy in general, in banks. That's like will be some stop losses, and it could affect companies and all the processes in the government. So it means that if we want to move to tokenization space everywhere and build the platforms, unfortunately, we need to take care of regulation of this process, because we start playing a really big game at the moment, because we could affect countries, we could affect world economy, and so on. So I think that right now we're in a place when we have rails for secondary market rates for tokenization, but it's still not well enough. Not so many rules how it should be done, and that's why it's still not so popular as it could be. So that's our DeFi view on this.
Thank you. Thank you so much for sharing. Very interesting thoughts on it. Austin, what do you think about these? Like, what does real adoption mean in RWA and tokenization today?
Yeah, for sure. I think Vladimir definitely hit it right on the head. Is just being able to have that regulatory standpoint kind of catch up with DeFi, so that way we know what we can do and know what we can't do. I think that's going to bring a lot of more and larger institutional players into the DeFi ecosystem. And then I think on top of that, like once we really get there, I think it's all about how we can create different types of structured products and be able to generate yield for different RWAs that you might not have been able to as easily as you could in traditional finance, and allowing those bigger players to be able to create, whether it's like delta neutral strategies, basis trades, carry trades, or being able to even collateralize some assets that might not be as liquid in the traditional markets, where you have to find a different counterparty to be able to work with. So in my opinion, and I think the beauty of DeFi is the composability aspect, being able to do the innovative pieces where you're doing rehypothecation with LPs, being able to stick them into lending markets, whether you're creating different types of structured products or vaults, and letting different curators be able to curate those different strategies for people to run on chain. So yeah, I think it's what Vladimir said is the first piece that we really need to bring into place to gain mass adoption. And then secondly is how can we do all the innovative and exciting things that bring new yield opportunities that might not have existed in traditional finance.
Thank you. Thank you. Well, I have nothing to add here. Just want to hear Melania's thoughts. Melania, what do you think?
Well, I agree. Yeah, I agree with Vladimir and Austin. Like that was um, basically covers also my opinion on this. But I think the real adoption, like in terms of RWA model, when we're talking about it, it's like where centralization where the law requires it, and decentralization where the technology allows it. In terms of a few years ago, the RWA market simply didn't exist. And in our case, like the pre-IPO exposure was locked behind minimum tickets in the hundreds of thousands of dollars, multi-year lockups, and access limited to a small circle of accredited US insiders, basically. Today, or like what we also hope for, like in the future, like a non-US investor can get exposure with a fraction of that capital. Exit whenever they want on our secondary market, for example, and verify on chain what the warrant is generally backed. This is where it comes, like the blockchain in our case, and that's something that, in my opinion, yes, that's what leads to real adoption. I mean, the moment when things get like still on blockchain, even unusual, let's say, for the past, like unusual tools and unusual assets, but they are also regulated in the way how like in the traditional financial way. So yeah, that's the difference between narrative and adoption. It's not that people are talking about, for example, pre-IPO on chain or anything else like an asset, but that it's that they are actually doing it. I mean, the moment where they start for real using our platforms, and they're actually not only talking about or checking if it's true or not, but they have the opportunity and the knowledge to profit fully from those type of opportunities. This is what I think.
I just fully agree with all you guys. Just from my side, nothing to add. And here, I would like to move to the next section, to more targeting question. So the first question will be directed to Hydrex. Yeah. So yeah, Austin, how does the market, why does the market need another liquidity layer? Like there are already many DEXs, aggregators, liquidity platforms in DeFi field, and like what problem is Hydrex trying to solve that existing platforms still does not still enough for the market?
Yeah, for sure. I think that's a great question because there are a lot of different DEX platforms, a lot of different, blockchain networks with their own instances of, UniV2, UniV3, AlGebra. I think that there's always the need when you go to these different chains and these different platforms to have liquidity. And I think what we're specifically solving, particularly on Base, is to help lower the cost of capital or cost of liquidity for these different partners, and also make this easier for people that might not have that DeFi expertise to be able to participate in a decentralized exchange at either providing liquidity, claiming the rewards, doing different types of automations. So if we take the automations piece, we have a few different options that you can play around with and utilize for adding liquidity. So again, the full range liquidity that you can add, super easy to add, adding 2 assets and kind of letting it be, but it's not as efficient as concentrated liquidity. So being able to have concentrated liquidity, you can provide tighter slippage, tighter ranges, and allow for folks to make better trades, which is great until your assets get out of range. So that's where automated liquidity managers, and for us specifically, using the single-sided staking. With the single-sided staking, folks, for example, can stake their Australian dollar and they can pair it against Frax's FRX USD. And in this, you're going to have predominantly 70% within the Australian dollar and then 30% within Frax's FRX USD, making this change as the price moves instead of rebalancing it manually on a daily, weekly, or monthly cadence. So that's the first piece. We do have all the plugins that you have with Base, a lot of the automations. So for example, if you're looking to swap multiple tokens within Base, it's oftentimes you're going to have to do many transactions to get those transactions to trade. Where with Hydrex, you can select those 8 different assets, essentially run one transaction and trade those 8 tokens all at once. So I think the first piece is that automation, making people's lives easier when it comes to provisioning liquidity, trading, and taking part in a V33 DEX. The second piece, I would say, is going to be focusing on different types of things that we can enable to lower the cost of capital. So we've worked with Frax and their FRX USD, which has a T-bill yield forwarding mechanism. So that way you're getting 3% on your Frax's FRX USD. That gets forwarded as a incentive mechanic to Hydrex stakers, which then they're able to pass additional emissions on top of that 3%. So oftentimes RWAs just don't have enough volume to efficiently pay for liquidity themselves without deep incentives. So by using single-sided staking, if you have a lot of your own asset, you can provide liquidity in one direction. you can also pair with Frax's FRXUSD. And then we're also working on some innovative stuff, and I'm excited to announce that soon. But I think that our big focus for Hydrex is making the cost of capital lower for LPs. And then lastly, Hydrex is omni liquidity. So being able to not just plug into DEX liquidity and source liquidity there, but plugging into Euler and Morpho and 4626 volts to plug those into the same Hydrex flywheel to be able to source liquidity for those different types of markets. Because when you look at just the base landscape, for example, there's Airdrome and Uniswap, which really only makes up about 10% of the total TVL, where that other 90% is really in those different types of lending markets that Hydrex can plug into. So for us, just automations, ease of use, trying to lower cost of capital for different asset issuers, and then lastly, being able to source liquidity not just from DEX liquidity, but plugging that into different types of markets.
Yeah, if you don't mind, I just would like to add what just Austin thought. So, I think it's a great example why blockchain is needed, why we are having TradFi. So in TradFi, it's impossible to create strategies which Austin mentioned. So, for example, trade Australian dollar against Frax, or build technology or build strategy on top of this one. So there is no way how you can do it in a real world, right? So that's the way why it's important to move real assets to on-chain, because we could create something new in strategies, in ideas, and brainstorm and build more revenue and profit for the users thanks to this one. So I think that's a great example.
Yeah, for sure. I think it's a blank canvas. I'm sure if we look back on this AMA a year or two from now, there's going to be a bunch of new innovations that either our teams or other teams are going to come up with. And I totally agree. That's the kind of the reason why institutions want to come on chain, is just the ease of creating those strategies and being able to do new things that you've never done before.
100%. I just wondering, such a wonderful projects launching on base. So base is quite too lucky. Yeah. Uh, yeah. So Vladimir, yeah, I want to move forward, yeah, and ask next question for you. Prepared next question for you. What's about the algebra? So why does AMA infrastructure still matter? Like many people thinks AMA MMM already solved the problem, but infrastructure keep evolving. What does algebra improve compared to early AMM models, and why traders, liquidity providers, or new DEXs should care?
Thanks, Roman. So if we go to the history of AMM, so until 2024, I believe, all the DEXs were the same. So if you trade on Pancake, if you trade on Uniswap, if you trade on Airdrome, if you trade on SushiSwap, it's mostly the same algorithm for all the pairs, all the blockchains, so the same curve. And thanks to algebra and Uniswap, it's moving to a new space where you could customize every pool, every pair, and you can build special extra functions called plugins or hooks on top of every pool, where you could add some extra behavior on top of this one. And why it's important? Because thanks to this, we could improve efficiency. Because, for example, if we have a high volatile asset, we can increase fees for liquidity providers and get more revenue. If we talk about stable coins, we can change curve behavior and make it more effective for trading. If we talk about RWAs, we can add some rules, which is extremely important because of regulation, to decentralized exchange space. For example, we could decide is the current user allowed to make a trade or not. So maybe he's blacklisted, or we just want to sell assets only to people who go through KYC, for example. We can also limit trading based on timing. So in other words, we could right now we can fully simulate traditional finance behavior on top of the decentralized exchanges, and you get the same how to say, so simple experience. So you can trade through 1inch, you can use call swap, you can use any wallet, MetaMask, and trade it as before, but all regulated, all the rules could be implemented on chain on AlGebra integral. So that's why it's important. So the main difference between AlGebra and all other dexes that we could customize every pool behavior in very safe and secure manner. So it's not affected liquidity. It's not so nobody could stall this one because of this one, but we could add extra rules on top of every pool. That's why AlGebra integral is one of the leading technologies at the moment.
Very impressive answer. Well, just nothing to add here. And yeah, hopefully such cross integrations for the infrastructure will be more, let's say, more common this current bank system. Yeah, and hopefully that in the future will be more adopted. Yeah. Here I would like to move to the next question. To the Melania. Melania, could you answer the next question? Could tokenized pre-IPO assets attract retail users? What do you think here? Like pre-IPO markets are usually associated with institutions and accredited investors from Wall Street and other. Do you think tokenized access can become interesting for retail, or will remain only mostly for the institutions? How?
Well, yeah, I mean, in the past, like all those like pre-IPO assets were like just only reserved for particular individuals and like inside traders, and also you needed to have the right banker and to be at the right place in the world. This is not anymore the case in a way. We do. I'm sorry. So yeah, I mean that's not the case anymore, and we are like kind of happy that this is changing and getting better and better. In our case, what we were trying to do and what we actually aiming is that we do want indeed to give the opportunities that were like only reserved for particular insiders to the mass, like to the population. And the way how it works is that we select usually like a late stage private companies preparing for listing on NASDAQ and New York Stock Exchange, for example. We do structure the ERC20 warrant token used under Regulation S, make it like it's accessible worldwide, but not in the US and for US residents. And this warrant gives our users the right to purchase shares at fixed exercise price, strike price, at the time of the IPO. If the market price at the time of listing exceeded what the strike price, our users can profit from the difference. And also, since it's a warrant rather than just a share itself, they can cost the cost is just a fraction of the share price, making the risk to reward ratio highly attractive indeed. And on top of that, we also give our users the opportunity to not wait for the IPO itself. They can trade the warrant on PIPO secondary market even before the listing. This means real price discovery and real liquidity indeed. When the IPO arrives, they can either convert the warrant into actual Nasdaq traded shares, deposit into their brokerage account, or sell it for USDC on our secondary market. So with this type of tools, like that's a lot more accessible for retail users, and actually our platform is done like for retail users, for like normal people to be able to benefit from something that before was like only for a particular part of the society, a particular part of the world as well. So yeah, I hope I answer your question.
Yeah, you answered fully. Thank you so much. Here I would like to move to the last two questions. So the first question is why are RWA becoming more serious now? Like we saw, RWA has gone through multiple hype cycles. Like what different from the previous one if we compare to the what we see now? Here I would like to hear Vladimir. Vladimir, what do you think here?
Unfortunately, I do not have a good answer from the world situation in general, but I have an answer from DeFi perspective. So first of all, what we could see during the last year that APRs it's extremely low. If we remember, like 2 or 3 years ago. So right now, I would say if protocol give you 10% APR, it's already very good. So it's people ready to provide liquidity there. But it's not so much if we're talking about real world. So it's not huge profit. And that's why we could see that a lot of people are leaving DeFi at the moment because it's a lot of risk in hacks, and a lot of risk in governance attacks, and so on. And RWA is like why it's great because we got new liquidity thanks to this one in the protocols. Number one, and number two, we get a new revenue source which were not possible before, like credit, T-bills. So I think it's very interesting to see how expansion goes through. So we started from stable coins and everyone understood it, including banks, enterprise, and so on. And now we have a T-bills, which is like mostly the same, but give you like extra 3 or 4% APR. And it's also easy to understand. And I think that's the main reason that RWAs give you a real profit, very safe profit, very close to stable coins, and it's just the beginning. So I think that's there is no good answer why it's happening right now. It's just because of the time. So people understood how it works, understood stables. Now they understood T-bills and treasuries. Now, then we can see they understood commodities and so on.
Yeah, that's true, especially regarding stable coins. Austin, what do you think about this?
Yeah, for sure. The multiple hype cycles, I think Vladimir hit it on the head. It's kind of like the slow adoption as we move to very liquid RWAs to probably not as liquid. So the stable coins to T-bills to equities, commodities, and then to different things like real estate. I think, from my opinion on why people are so interested now, I've always had the hypothesis that RWAs and like ecosystem, kind of your more native crypto assets, are in like an inverse hype cycle. So when meme coins are booming, ecosystem projects are booming, altcoins are booming, RWAs aren't picking up as much traction just because they don't have the type of returns that people are really looking for. But then when, meme coins, your altcoins are down 70, 80%, 90% over the past few months, it makes RWAs and more quote unquote safe assets more interesting. So that's where I think people start to get into the RWA space, and we start to take advantage of what the RWAs have built out during kind of their quote unquote slow periods when people are paying attention to different altcoins, meme coins. And then now, like what we're seeing as of recent, Coinbase is really pushing on stocks. We're starting to see more and more RWAs come up like LeanFi. And I think that's where the RWAs start to come into play because the meme coins and altcoins don't have the spotlight. So my opinion is just there's like an inverse relationship between the two. They kind of balance each other out.
Thank you. Thank you so much for the answering. Very interesting thoughts regarding the cycles. I just want to say that you have a mix of thoughts regarding the cycles, and very interesting what Melania answered here. Yeah, what do you think about the previous cycle and current cycle? What different?
Well, mm, was okay. Yeah. Honestly, this is the way. I mean, this is the way. This is the year RWA stopped being just a narrative. We've gone from a few billion to over 30 billion of in on-chain real world assets, and it's not just crypto native money anymore. Like we have BlackRock, we have Franklin, we have all the sorry, we have Templeton as well, and even the DTCC are actively building here. That's not a signal you should ignore. No one should ignore this, in my opinion. But also, let's be honest, 30 billion is still like kind of a small fracture next to the hundreds of trillions still sitting in global private markets, real estate, private equity, and pre-IPO deals, for example. We are at the very start of the curve, I believe, not in the middle at all, not yet there. The infrastructure is being laid right now, and that's exactly where PIPO is positioned, or at least this is what we're trying to do. What fundamentally changed is the legal and regulatory base, in my opinion. For years, RWA tokenization was a great idea with no clear path to compliance. That's shifted this year a bit. We now have regulatory frameworks emerging across multiple jurisdictions that actually allow tokenized securities to exist, be traded, and be held by, like, again, non-US investors. That's what's finally letting in serious institutional and retail capital. That's what changed this year.
Thank you so much. And here during the last question, Melania, what do you think? Like how? What would success look like by the 2030, especially RWA, DeFi, and in general in crypto space? What do you think?
Well, like that success is kind of it's diverse for the different like type of perspective and from like different targets people and companies do have. In my opinion, I think that first I think that the pre-IPO market is no longer a black box. It's not anymore something that never heard of it. Today, roughly, we have about even more than 700 late-stage private companies that sit on trillions of dollars, and indeed, there is no secondary market for them, and zero price discovery and all those stuff. In 5 years, like or 10 years even, I don't know, like in the future, I hope, I expect that this will be normal infrastructure, much more like tokenized treasures, when like it will be a completely normal thing to be done and completely developed business, let's say. Like on secondary, like I think that IPO itself changes shape, and I hope this will continue. Right now, going public is a single binary event. One day you are liquid, the next day you are on Nasdaq. I think we will see companies gradually rise and distribute liquidity on chain well before their listed date. So that be the time that actual IPO happens. Price discovery has already been underway for months or years. And yeah, the IPO will become like all those processes. I hope for us that will get a lot easier, and a lot more people will be participating in this type of kinds of markets, and it will look more normal and more like not that extraordinary topic and all those like complete yeah. I mean that's what my mind is about. Like I would hope that everything will get a lot more smooth in terms of how users use different tools that are currently like new, and I hope that it will go more viral in the future.
Well, interesting thoughts. Thank you so much. Yeah, Elsa, I would like to hear the same. Maybe yeah. Like ask the same question as like what would success looks like in RWA, DeFi, in general in crypto space. Yeah, Vladimir, what do you think here?
I think it's quite popular opinion what will happen next. So I think we will see 1 or 2 or 3 super apps where you can see the list of all the assets and all the ways how you could invest or buy something. So all in one place, and will not care what chain, what I don't know, bank backed this token and so on. So and also that's number 1. So we'll see all the assets, crypto assets, real world assets, I know, stocks, all in one place in one application. And the second one that of course is like AI, that you could ask what it's better to do for you depending on your risk profile, on your personal income, your future plans, I know, to buy house, or I don't know, to save for your future life. And depending on this one, you'll get personal investment plan, which will be executed automatically by AI agents and using blockchain rails on top of this one. So I think we just like in the beginning of this a long way. And thanks to Hydrex, thanks to AlGebra, thanks to PIPO, we get assets more accessible for the users. The next step is to get more and more assets in one place, maybe on one or two chains, and then add AI, which could help you to manage this huge amount of possibilities, to track it, to manage, and to help you to achieve your personal goals. So I think that's the future. Maybe it's like in 5 years, everyone will forget what we're building right now because it's just not needed. So everyone will see like very simple interface which will managed by AI for your personal needs. So that's our dream.
Yeah, that's true. Hopefully that dream will come true. Yeah. Yeah. So the Austin, what do you think? What should we expect? And how do we see 2013? 2030?
Yeah, 2030. Yeah, I mean, the dream's definitely to have everything go on autopilot, consolidation between all the blockchain networks, and not have to set up a different wallet and be able to either make it easier for AI agents or your traditional apps to plug into the blockchain. I think past that, I think a lot of regulatory clarity would be a huge success to really open the floodgates to bring in more traditional finance institutions to come on chain. And I mean, realistically, it's just the amount of total value locked within DeFi. I think that's going to be a huge win for DeFi because the more liquidity, the more things we can do, the more strategies we can create, the more things AI agents can do. So, I mean, dream big. I know we've kind of hit the close to 200 billion mark if you look at like DeFi Llama, but if we can get close to that $1 trillion marker for total value locked, I think that's going to be a huge win for DeFi itself. So yeah, more liquidity, easier to use, automation, AI agents really running the show, and being able to have simple apps that people can interface with, I think is going to be a huge win for adoption because we're building the rails right now and tokenizing the assets, and being able to make things easier for the end users to bring more folks on, knowing that they don't have to, they don't know that they're using the blockchain. Is kind of my thoughts.
Yeah, just nothing to add. In general, yeah, fully agree with your thoughts, guys. Hopefully that in the 2030 we'll see real mass adoption instead what we had, let's say, 5 years ago. But we see that situation is changing and adoption is really coming, especially in compliance field. Like we saw what happened after election in the United States and in general, like around the world, mass adoption is coming into our lives. So just want to say thank you so much for the Vladimir, for the Austin, for the Melania, and your projects. That was very interesting. Yeah, to talk with you guys. Thank you so much. Was wonderful May session. Hopefully we'll see you again.
Thank you, Roman. Thank you, PIPO, for invitation. Nice to be here.
Thank you.